This is Daybreak Asia. We're counting down to Asia's major market opens. And Haidi, we've got stocks sitting around all-time highs, but there's the big test that's coming up in the days ahead, and that is Nvidia's numbers and the question whether all of that enthusiasm and demand that we've seen for its AI chips, if that can extend.
Yeah, and every time this comes around, we're sort of wondering how much higher can this push, right? This is the stock that basically ignited the entire rally, and how much longer can the momentum be sustained given these elevated expectations? But Belle, at the same time, you still have the steady drumbeat of the messaging from the Fed, right? Loretta Mester saying that more evidence needs to be seen. She was in the camp of three cuts, and now that's looking much less than certain across the market expectations.
Yeah, very busy day for Fed speak, but let's just kick off with what we're seeing in Japan here, because the big focus in this region or that country right now is what's happening with the 10-year yield. And you can see here just continuing to track a bit higher. We're sitting at around levels that we haven't seen since 2013 for this bond here or note. And certainly the question is the agitation that we're getting from traders, when we're going to see the BOJ start to cut or hike rates rather. Some of the analysts and economists that we're hearing from are saying 3 moves this year could still be possible. We are, of course, as well getting closer to that 1% mark. So, again, continuing to track that 10-year yield there at levels that we haven't seen since 2013. It really does play into the currency dynamics. And, again, today in the session, just the yen fractionally weaker against the dollar here, but trending back again closer to the 157 mark. Stocks-wise, look, we're a little bit high right now, but fairly range-bound on the session, and I think that really points to what we were saying. Nvidia numbers are the big focus for us, and those are yet to come out. And still, it's that digestion of the comments that we're getting from Fed officials. You mentioned the Cleveland Fed president, Loretta Mester, 3 rate cuts this year could no longer be appropriate. What does that mean, of course, for the dynamics of Japan as well, that yield gap we continue to track? And then also Raphael Bostic saying that he expects a higher, steady rate for rates as well. So just some of the different officials we're hearing from really reinforcing and reiterating that wait-and-see approach. In Korea today, let's just take a quick look on how markets are coming online this morning. Of course, eco data to note, a couple of different points. Firstly, we just got the trade numbers coming out for the first 20 days of May. Exports, we've seen those rising 1.5%, so still in positive territory but it is quite a significant slowdown from the month prior. Chip exports as well, though, big gains there. We're actually up 45.5% on the year. Imports, though, they've contracted nearly 10% in the latest numbers coming out as well. So you put that up against what we also had in terms of consumer confidence numbers this morning. We've actually seen Korean consumers turning pessimistic. Again, that's as the BOK continues to hold rates higher for longer as well, Haidi.
And Belle, take a look at how we're faring here in Australia. And of course, some of the assets are sort of under a bit of pressure, particularly when it comes to the currency, really at risk from the early moves we've seen this week in the dollar with the pushback on easing expectations from the Fed. That sort of goes hand in hand. You see the Aussie dollar kind of holding pretty steady. 66.72 is where we're trading. The first couple of minutes or so of the cash trading session here in Sydney, not seeing much of a move there at all. You mentioned, of course, the Japanese benchmark yield hitting decade highs. We're seeing that move when it comes to the slipping in treasuries kind of that played out in the previous day. That was a third day in a row on Monday. So potentially we have a little bit more to go when it comes to last week's rally in bonds. But it's this to and fro when it comes to how inflationary pressures are perceived and how the Fed will react to that. That is obviously still at play here. Energy prices will be a major part of that. Commodity prices in particular. We see copper still pretty close to those record highs there, under 11,000 at the moment, but still pretty close. And Brent not getting the geopolitical risk boost that perhaps we expected. Still a lot of kind of looking ahead to that June OPEC Plus meeting and whether these supply settings will be kept unchanged. But as I mentioned, this sort of drumbeat of what we've been hearing from the Fed continues, and we heard from Loretta Mester amongst others overnight. Take a listen.
I was on the record before saying I was at the median, which was 3. The developments I've seen in the economy right now, I would not think that that's still appropriate because the inflation risks have moved up.
I do think that our new steady state is likely to be higher than what people have known over the last decade. Maybe back to where we were in the 1990s and 2000s, but we'll just have to see.
Let's bring in Junbei Liu, who's a portfolio manager at Tribeca Investment Partners. Junbei, always great to have you with us. So, there's sort of to and fro in terms of Fed expectations. You, in fact, think that they will move quite quickly. Inflation will get to a point where it starts falling quite quickly. What's the trigger there? Because you don't see a cut at all this year.
Look, this year is not going to take place because the inflation is taking a bit longer and the consumer is taking a bit longer to really reduce their spend. So we do think, however, we do think by the end of this year, this calendar year, there will be a lot of softness that we're already seeing the trajectory of to start appearing. And so by next year, we do think the cut is coming through. But maybe it will stay a little bit higher for longer, but the cut certainly will start early next year.
And at the same time, we're seeing the momentum trade still being driven by AI, right? NVIDIA, obviously the one to focus on. How much are you looking, and how much is it possible to start looking ahead to, the sort of second tier, third tier effects of AI and which companies are going to benefit? Is that something that you're looking into?
Absolutely. I think this is an incredible trend. And, I think it will be very short-sighted for any investor to dismiss this as a bubble. I think it has now become entrenched into the society, into many corporates. Every company we've spoken to have talked about how they can utilize the AI tools into their existing model to improve efficiency and maybe even take advantage of opportunities. So, it is real. However, now it's like you said, it's going to so many second derivatives. So not only it's the chips itself, it's going to software, and then we've seen it into the data center. Incredible amount of data center capacity is required over the next few decades. And with the data center comes the requirement for energy. So now we look into that whole supply chain of how we can take advantage and generate a return through that whole supply chain.
Are there any names that stand out to you in particular to capitalise on this?
Look, absolutely. So we here in Australia, we're seeing through the data centers as the easiest way to play this trend because we don't have the likes of the NVIDIA. The data centers such as NextDC and Goodman Group. Goodman Group is incredibly interesting because it used to be an industrial specialist, property specialist, and has global reach and in the top 5 in the world, and now has branched into the data center, and it has secured many megawatts of power and demand over the next decade. We think it's this trajectory is going to drive the growth for those companies for many years to come.
Japan has been sort of one of the key beneficiaries of that AI trade, and one of the reasons we've seen a run-up in stocks. Do you see that performance extending, or do you think it's a bit overstretched and investors are just putting their money back into other markets like China now, for instance?
Yeah, I do think that the Japan market has benefited somewhat in the last couple of years with the weakness in the Chinese market, as well as uncertainties of other surrounding market that's impacted by the Chinese slowing economy. However, we are seeing now with improvement or at least stabilization in the Chinese economy and the green shoot, we are seeing a bit more flow back into those markets. Certainly, Japan, those segments, the high growth segment is doing very well, but I do think overall in the next 12 months it should expected to be underperforming the emerging market like China.
Yeah, and Junbei, to what Belle was kind of saying, we're also seeing this perhaps be expressed through the outflows for India stocks as well, right? You take a look at this, the outflows that we've seen across the Indian market, which has of course been such a darling, and valuations are so expensive in this market, have really accelerated. But we've seen that underperformance by MSCI India to MSCI World by nearly 5% so far this month. So do you think that this is a case where we're seeing portfolios be rebalanced towards China, even though the property measures were really by and large considered not enough?
No, absolutely. So I do think China is coming back in terms of growth, but it's just slowly. And I think that what we see in terms of the outflow out of India and out of Japan, those defensive market into China, is still at the fringe. It's still in a small way. I do think in the next 12 months, when we do see growth stabilizing in China and things getting better, consumer getting more confident, I do think that sort of growth in terms of flow is going to be quite significant.
Junbei, I've got a question about the risks that you're seeing for markets ahead, and one of the ones that we've been talking to a lot of different investors about is the US election, of course. Do you see that as a key risk? But then I'm also noting as well that you think that it might not result in all the sorts of volatility that perhaps some are expecting as well.
Absolutely, and that's a really good question. You know, you talk to any investor at the moment, you ask about what's the major risk. They talk about it's the U.S. election, just because our experience from the previous election with Trump, because of his erratic policy directions. Now, this time around, it certainly seems that a lot of his tariff that he talked to and previously imposed hasn't really been removed, and we've got Biden already now imposing some new tariff. So, you know, it's I do think this election may not be as volatile and as risky as expected by many commentators. Perhaps it could even just be business as usual.
It's interesting, business as usual, because it kind of fits into this idea, well, now punitive trade measures are now the mainstream tool in both camps, right, regardless of who takes the election. How much of the trade pressures, not just from the US, but the EU probe into Chinese EVs, how much is that going to impact China, given that EVs, batteries, it's sort of at the heart of what President Xi wants to prioritise to boost the economy?
Look, I think this is the world that we talked to perhaps even 5-10 years ago. That the world will become more disintegrated. So, you know, Chinese companies and China will form its own pack in terms of trading, and then you have the West and, you know, the US, and so that will continue to take place. But look, I think the US election, one thing it might create a bit of disruption is what Trump's policy towards EU. So right now it seems to be, you know, the EU pack against the Chinese companies and how, you know, the policy might be formed. But should there be any punitive impact on the EU companies in terms of their export into the US market, that might create even a bit more disruption to, you know, what companies are doing. I think ultimately it's for businesses to thrive is really about have stable policies. You know, if you have sudden changes in policy, it becomes very difficult. And most of the businesses now have talked about or already done about moving supply chain to very different areas where they have less of those geopolitical threats. And I think, you know, if the policy doesn't change in a sharp way, that businesses will be able to thrive in this sort of environment.
That was Junbei Liu there, Portfolio Manager at Tribeca Investment Partners. Thanks so much for your time this morning. And about 10 minutes into the session so far for Sydney, Seoul and Tokyo, and actually watching the bond space in particular this morning and the Japanese 10-year yield in particular here, because you're continuing to see them just ticking a little bit higher and getting closer to that 1% mark. These are levels actually we haven't seen for the Japanese 10-year yield going back to 2013, which, to put it in perspective, was actually when the BOJ Governor Kuroda was starting his radical monetary easing. But certainly what we're hearing from investors, and actually when you take a look at swaps pricing, the odds of a rate hike even by the July meeting has increased, and some of the people we're speaking to saying perhaps 3 moves for 2024 could still be possible here. But certainly that is really the big question, especially when you've got Japan really grappling with that weak yen. Again, you can see that at the bottom of the screen, close to that 157 mark. We'll have more to come on Daybreak Asia. This is Bloomberg. Just some breaking news crossing the terminal relating to leadership changes at Samsung here, and we've got a new head of the chip division. This is, of course, a very pivotal part of Samsung's overall enterprise, but Samsung appointing Young Hyun as the head of its chips division. That's according to an email statement. So the current head will be becoming the head of the future business planning team instead. Samsung, again, it's a little bit weaker, but fairly range-bound so far, down around 0.5% at this point in time. But the chips division, as we said, has been really mired in a long-standing slump that we've seen broadly for semiconductors. Back in March, they actually said that the business should recover to 2022 levels this year. And Samsung, of course, really pushing ahead with a partnership with NVIDIA around HBM, or high bandwidth memory chips, which is a very critical component of the graphics processors that train AI systems, Haidi.
But we're watching energy markets as well as geopolitical developments. It's been a busy start to the week with power transitions in the Middle East now in focus after the death of Iranian President Ibrahim Raisi. In Saudi Arabia, the king's health is being closely watched there as he receives treatment for a lung inflammation. His son, of course, the Crown Prince, cancelling that visit that was scheduled to Japan this week to stay there. Bloomberg senior editor Bill Ferries joins us now for more. So, Bill, we have sort of been canvassing opinions from experts, and the analysis seems to be that continuity will be ensured for both of these governments or these administrations. Where's the uncertainty for you, particularly when it comes to Iran and the fact that Raisi was one of the top contenders to replace the supreme leader?
Right. That's really the biggest question, I think, now for Iran is who is next in line to replace the supreme leader, who is in his mid-80s at this point, and many people had believed the late president had been set up or had been in position to take that spot. Immediately for Iran, they have to. We're expecting elections to take place within the next 49, 50 days. So that will determine who the permanent replacement is as president of Iran. But that, we'll have to how that unfolds and who emerges from that process, whether it's the current interim president, Mohammed Mokber, or someone else. There will be some sort of a power struggle, we expect, between possibly the interim president, the supreme leader's son, and always a chance that some kind of a third candidate emerges in this process. So there's, I think, even less of a focus on who becomes the president in 50 days than on who gets set up from this process to become the next supreme leader.
And it's not just succession arising in Iran, of course. There's also Saudi Arabia, as Haidi mentioned, and perhaps continuity there. But do you see these changes sort of derailing the détente that was brokered by China last year, and also as well Iranian support for regional proxies?
Yeah, I think the big question is perhaps on the proxies, not whether Iran will continue to support them, because I think the Islamic Revolutionary Guard Corps is going to continue supporting proxies like Hezbollah and the Houthis. That will continue. I think both sides in this, Saudi and Iran, see the benefits of trying to sustain that détente. In Saudi Arabia, of course, you have Crown Prince Mohammed bin Salman, who has been long running the day-to-day business of the kingdom and leading many of its biggest initiatives, whether it's, you talk about the 2030 plan, the outreach with Israel, the work with the OPEC Plus group. I mean, MBS has been basically at the forefront of all of that. So I think there would be very little policy change coming. It may slow down some critical decisions, such as this agreement to potentially reach a deal with the U.S. over security and energy. But I think both sides, when you look at the big picture, have seen the benefits. These are two of the biggest, historically biggest rivals in the Middle East. They are trying to get over that to some level. So the more uncertainty, I think, comes with the kind of internal politics of Iran at this point, rather than the foreign policy of either nation.
It's an extraordinary, I mean, I think our last guest has said it's never an uncomplicated time in the Middle East, right? But this comes just a few weeks after we've seen kind of this shadow war, if you will, test red lines between a number of these parties. And I do wonder how much more complicated does this get with the leadership change in Iran potentially, and how that impacts this conflict that we're still seeing in Gaza. We've also just gotten the ICC levelling these arrest warrants against both Netanyahu and Hamas's Sinwar for crimes against humanity.
Yeah, you have the ICC decision. It's not clear how that will be enforced. It was not surprisingly rejected by all sides when it came out that they are seeking arrest warrants for both top leadership of Hamas and the top leadership of Israel. I think the big X factor in all of this is that conflict in the Middle East between Israel and Hamas at this point. We've certainly seen since that took off in October that developments on the ground can very quickly shift the politics in the region. You could have a major incident take place there that does change the calculus for a country like Iran or a country like Saudi Arabia or even the U.S. So that's where I think a lot of the uncertainty lies. There's still efforts going on at having some sort of a temporary ceasefire, but we've now been talking about that for about 3 months and haven't seen it come to fruition. And of course, you have the internal politics of Israel as well, which seem to be heading in a slightly less predictable direction at this point.
Our senior editor, Will Ferry, is here, and some of the other stories that we're following across geopolitics in China has criticised the inaugural address of the new Taiwanese president, Lai Ching-te. A spokesman says Lai sends a signal of seeking independence and that the motherland must be reunited. Lai was sworn in on Monday and used his first speech as president to call on China to end its campaign of pressure on Taiwan. South Africa's top court has barred the former leader, Jacob Zuma, from running for parliament. That's due to his 2021 conviction related to the plunder of almost over $27 billion of state funds during his presidency. Zuma's upstart political party is seen as a wild card as South Africa gears for elections next week. Plenty more to come here on Daybreak Asia. This is Bloomberg.
Well, Microsoft has introduced new software and computers infused with AI features as it steps up efforts to compete with Google and Apple. CEO Satya Nadella spoke exclusively to Bloomberg about the AI race.
It's really a ground-up, reimagination from silicon. So we have a new SoC that has the NPU. So think about it as we've always had CPUs and GPUs, and now you have neural processing units to, in fact, locally process these AI models. We have 40+ AI models that are local on Windows machines that then are being used by a variety of experiences that we have built into Windows, starting with this photographic memory feature called Recall, which is just phenomenal. And of course, Copilot is built in to Windows. And Copilot is just not an app. It's sort of a shell affordance that's going to be there assisting you as you be showed a demo of somebody playing Minecraft and, me just sharing my Minecraft screen with Copilot. And Copilot helps me finally be as competitive with my daughter on Minecraft I has always dreamed of, right? And then, of course, the third parties. I mean, Adobe showed how they're bringing all of what they do to Copilot plus PCs and many, many more other developers. So it's an exciting day for us to have a complete rethink on the full stack of Windows for the AI age.
I bet you're pretty good at Minecraft, just a hunch. This new feature, Recall, means your computer basically has a photographic memory of everything you do on it. And the speed at which this is all happening is just so fast. It seems so unprecedented. How will this really make things different for consumers and change our daily routines?
Yeah, I think if you think about the PC, it has always been about creating things, right? Which is, it's about being able to synthesize lots of information, create new information, pass better judgment, gain insights, and act, right? That's what you sort of do on a PC. AI is an assistant. AI helps you as an end user do anything, right? So one of the most beautiful demos today was even this thing called Co-Create, right? I am in Paint, and I'm painting a nice spring Seattle day, and I want mountains with wildflowers, and I can now have the AI assistant. That painter in me now can be inspired by AI, but ultimately I'm the one painting, and I get that satisfaction. I feel one of the things that's been one of my coworkers was telling me when her 5-year-old is saying for the first time, give me designer time. That's what felt, it feels like in the late 80s and the early 90s when we all fell in love with PCs. That was what really got us going, which is the ability to use computers to create. And I think this AI is just going to take it to the next level.
Microsoft CEO Satya Nadella there speaking with Bloomberg's Emily Chang in that exclusive conversation. We're watching the yen at the moment as well. We are getting to some lines through there from Suzuki. Really, again, at a time when we continue to kind of see commentary on the yen, both pluses and minuses when it comes to that yen weakness being acknowledged there. All right, we do have some data just crossing the Bloomberg when it comes to the Westpac consumer confidence numbers. And of course, a big focus when it comes to the Australian consumer, given the elevated rate scenario that's playing out here. We have seen a further decline there when it comes to consumer confidence to 82.2. That's a 0.3% decline month on month. Consumer sentiment, actually, interestingly, seeing a rise of 4.1%. Family finance is seeing a deterioration of 3.6%. We're seeing expectations of the year ahead also seeing a fall there as well. Some expectations of an economic improvement broadly for the year ahead. 5 years ahead also seeing a bit of an uptick there as well. Interesting when it comes to purchasing power and sort of retail sentiment, if you will. The likelihood of purchasing a major household item falling almost 3%. But the property sector and confidence seems to be holding up as well, with a gain there when it comes to purchases of a dwelling. And of course, Australia's economy and sort of broader market sentiment continues to hold up as we see this swing back to high iron ore prices. In fact, that's pretty close to $120 again on the back of some of the optimism that we see around China. The copper price is also, of course, part of that, as well, as we see it come off a little bit in terms of that record above 11,000 level, but still these bets on the short-term supply shortfall continues to build. We've seen LME prices up more than 25% this year when it comes to copper. We're still up just about 1% at the moment in the session there. We did see that jump of more than 4% in futures trading. That took the price beyond 11,000 a tonne for the first time. We've seen some of that being paired, but clearly the trajectory is still towards a positive. We've seen everyone from banks to miners and funds touting these long-term prospects for copper for a few months now. Silver futures are lagging. We have seen that sort of forge ahead when it comes to strength in the US dollar. That's weighing a little bit on precious metals. Oil is another one to watch, and perhaps you would expect a little bit more in terms of geopolitical pressure upside for crude prices, but that's not really playing out. Crude looking pretty flat at the moment. New York crude trading under $80 a barrel, as really the focus, Bell, remains on that OPEC Plus meeting coming up in June.
Yeah, Heidi, and taking a look at how we're going in equity so far into the session, 30 minutes into trade for Sydney, Seoul and Tokyo, you are just seeing stocks sort of fairly range-bound so far. Trading volumes are kind of around their 20-day moving average, but it is that big countdown that we have to the NVIDIA numbers that are due out in the days ahead. And then you can add to it as well just the chorus of Fed officials we continue to hear on reiterating this narrative that they should stay higher for longer. Earnings, of course, are focused in other markets, and Japan in particular is seeing moving 0.5% to the upside. But let's actually take stock of where we're at in the earnings season here, because at this point, most of the companies on the Nikkei 225 have release their numbers. Actually, when you take a look at who did well, who didn't do as well, we saw around 60% of companies reporting upside surprises. We had earnings growth coming through, and actually one of the names coming out overnight was Tokyo Marine, or after the bell yesterday. Tokyo Marine offers property, casualty, life insurance, as well as asset management services, and you're seeing that stock trading higher today after its full-year net income forecast beat estimates. So one of the ones in the green. In the red, of course, largely led by the financial stocks, and we saw big laggards coming through from some of the Japanese banks, a 45% decline in net profit. Japanese banks, of course, ones that really would benefit from a rising rates environment. Let's switch to China's earnings outlook as well, because we've actually seen pretty good earnings growth coming through from a lot of the different Chinese names. But Trip.com shares, they're going to be very much ones to watch when trading starts in Hong Kong in the next hour. Here you're taking a look on the screen at the US or the ADRs, and you could see that bump there in extended trade. So we saw Trip.com reporting earnings that beat the average analyst estimate. Let's get more now from our Bloomberg Intelligence Senior Research Analyst for APAC Hospitality, Angela Hanley, joining us. And Angela, yeah, an earnings beat, but what stood out to you in particular from this?
I think every line of revenue were kind of in line with expectations and also kind of maybe a bit better than guidance. And I feel like the major upside was coming from leisure travel demand because I see that the package tour revenue was more than double from last year. But if you compare with that, the corporate travel, which is more about the travel, business travel side, is kind of lagging a bit because it was only up by 15% on a year-on-year basis. That means that, like leisure was like more than double, but corporate travel was only 15%. Yeah.
How does the Trip.com result compare with other travel stocks?
Yes, I think the major comparison can be some other China hotel stocks like H World or even Shangri-La and others. And what I say is that the T-Com's performance was much stronger. So check about the H World's 1Q revenue per available room was kind of weak and also might be declining on a year-on-year basis in the second quarter of this year. Maybe because it's coming from high base and also because we are seeing that the outbound tourism of China is having a really strong growth. That means that the T-Com as a travel agency has much more exposure to overseas business. That's why it's doing better. So what I feel like in China is that the divergence of wealth gap is increasing because people who have money can still travel out and they want to enjoy shopping in Europe because it's cheaper now. But they feel other ordinary people are still staying in China and maybe even spending less money than before in traveling.
Yeah, that two-speed is really interesting because I think it really plays into the dynamic that we've seen this year over Golden Week and going back to Lunar New Year. It was that trend of more people are travelling, but some are spending less than pre-pandemic. How do you see that affecting Trip.com in the months ahead?
So usually it looks like a domestic travel market is kind of weak because some people are traveling out, but to be honest, I feel like, how many people can travel out from China? So outbound travel is really about people who have money. So ordinary people is they are spending less than before. But T-Com is a bit different because the company has been gaining market share in this agency market. So during pandemic, those people who are living in small towns used to go to offline travel agencies to book their trips. But now they might be just doing everything online because during pandemic they know how to use everything. Suddenly a pandemic made every one of us to become much more tech savvy. So in that sense they are gaining market share. That's why they are doing much better than the general market.
Bloomberg Intelligence Senior Research Analyst for APAC Hospitality, Angela Hanley there. More to come here on Daybreak Asia. This is Bloomberg.
The annual CITIC CLSA Japan Forum begins in Tokyo today, bringing together senior corporate executives and institutional investors from around the world. Joining us now is Oliver Matthew. He's Japan country head at CLSA. And Oliver, you've actually just kicked off the event. So give us a sense of the tone on the ground and the sorts of conversations that you're already having with people that are attending the event.
Well, thank you for having us. Yeah, we're very excited. This is our 20th Japan Forum, and we have more than 50% investors attending versus last year. So it's great to see an increase excitement about Japan. And there's a real debate going on here. Not everyone is convinced that Japan can continue to rally from here, but we're having a lot of very detailed and constructive conversations about the improvement in corporate governance in particular. And I think that is an absolutely key focus for many of the investors and many of the companies as they make the case. We are more interested in investors. We're more interested in our share price than ever before. And we're seeing a very strong debate kicking off this morning.
Corporate governance in particular, tell us more about that because, of course, it's been one of the reasons we've seen the big run-up in Japanese equities. What more do you think needs to be done if you could just take away maybe one or two different sort of objectives?
So the role of independent directors is definitely a key theme. You know, how independent are Japanese companies? Are they really willing to let the board of directors tell the management what the strategy should be? Are they willing to appoint the right people to their boards? This is one key area. Another one which is starting to become a big debate is executive compensation. Japanese management and staff are underpaid, and investors are very happy to reward them with higher pay packages. But what is the kind of structure of that compensation, and how is that going to happen? Those are quite prickly issues. There's a lot to be discussed, but the debate is raging on those two fronts.
Yeah, Oliver, it's interesting because there's always a sense that, you know, when it comes to momentum flows, investors can be quite fickle, right? We're starting to see some flows redirected perhaps back into China from whence they came, and also from, you know, other darling markets like India as well. It's not just Japan. So I suppose the question is how you sustain this next leg of growth for this equity market. You've touched on some of the points already, but what do we need to see on a macro level from the Bank of Japan?
Well, you know, the Bank of Japan is obviously looking for inflation and wages, and, you know, wage increases going to be good, we think, for some of the consumer companies who are willing to use pricing power. But for the overall market, I think what's really key is the companies continue to deliver higher ROEs and higher profits. Now, for some of them, a weak yen is good for that. For some of them, a stronger yen is going to be a problem. So they really need to look at the underlying profitability and the key business units. So on that front, we also see a nice combination of, you know, activist investors pressuring companies, private equity allocating more money, which is helping speed up some of these changes which need to happen. And once investors get a sense, you know, this is a different paradigm, which I think has started last year and continues this year, you know, they will put more money into the market. We're seeing a pickup in investors from all regions around the world. But the debate is still raging. They have not decided that Japan is really the place to go overweight 100%. So that, for us, that's the opportunity.
The debate when it comes to, you know, the benefits versus the detriments of the moves we've seen in the yen continues, right? We had some commentary from the finance minister just in the last sort of few minutes or so. You've talked a little bit about how Japan Inc. has either benefited or not from that. Do you see a strong correlation in terms of demand for Japanese equities, the performance in that market and levels in the yen? And also, I suppose, how that feeds through to domestic purchasing power, right?
So many global investors want to see the yen strengthen, right? If you think in dollars, if you buy the Japan market, you want the yen to get stronger. So, you know, there have been some sectors like real estate where people are thinking that might happen and they'll show some interest. On the other hand, for exporters, obviously, you want to have a weaker yen, and we've seen technology done very, very well on the back of AI and currency. So, you know, it's really still a battle across the different sectors. I don't think it's as simple as saying, you know, the yen leads to one decision on Japan equities. What I would say is one sector we still feel has been left behind is consumer and internet, where, you know, people are looking at domestic demand and they're not convinced it's going to be very strong, and they've kept away from a number of these stocks unless they have exposure to tourism. So we actually think that there are some very nice opportunities with the consumer sector where they're going to have pricing power and they're going to display that, and that's where we can see a lot of upside in share prices in that sector in particular.
Oliver, great to have you with us. Oliver Matthew, Japan country head at CLSA there. Well, an annual conference of Australian oil and gas explorers and producers is well underway in Perth. The industry is at this time grappling with the transition to net zero emissions. Bloomberg's Paul Allen is there for us. So, Paul, it is a bit contradictory for oil and gas, of course, to say that it's helping usher in the era of carbon neutrality.
Yeah, it does feel that way, but something's going to have to fill the gap in between that transition from, well, a lot of Australia's energy is coal-fired towards the new energy economies. So it also dovetails with what the government was saying during last week's government budget when it unveiled its future gas strategy. But it's going to take a while. Not only does this transition need to take place, there's a plan to transition Australia to becoming a critical minerals hub. That's going to require a lot of energy as well. At the moment, about 42% 40% of Australian manufacturing energy is supplied by natural gas. Now, just on the eve of this conference, the Producers Association did publish a report from Rystad Energy estimating that just Western Australia is going to need 8 to 10 trillion cubic feet of gas to support it over the next few years. And at the moment, current supply is only offering less than half of that.
Yeah, that is a really big gap there. So what's the current state then of oil and gas exploration in the state, Western Australia?
Yeah, well, we heard from the Australian Energy Producers CEO just last hour. That organisation is describing the current offshore approvals process as, quote, broken. So a lot of work needs to be done here to bring these new projects on. A week ago, Santos here in WA laid off 200 staff as old projects were getting wound down, and there's no approvals in place for the new ones being wound up yet either. The Western Australian government, for its part, says, well, look, it's got no environmental approvals in place for Santos at the moment, but a lot of the bottleneck seems to be happening at the federal level. But on the other hand, we also heard from Baker Hughes. It's about to relaunch its offshore drilling service here in Western Australia because it sees a huge pipeline of oil and gas activity coming. And the CEO of Woodside, Meg O'Neill, is about to be giving a speech to the plenary here. Basically, the takeaway is supply, supply, supply. We've got prices at levels we haven't seen since January. She says the remedy to that is to bring on more supply and do it quickly.
All right, Bloomberg's Paul Allen there at the Australian Energy Producers Conference and Exhibition in Perth. A lot of big names speaking in the hours ahead, but we'll have more ahead on Daybreak Asia as well. This is Bloomberg.
It's not about just delivering a box, it's about delivering an entire infrastructure. And that entire infrastructure is insanely complex. The last 30 years, both of our companies have changed a lot.
All our new PCs will be AI PCs, right? And the reason is that anything that you're doing that has an edit prompt is going to be sped up because every software developer in the world is figuring out how to use all this new power in the GPUs and the NPUs.
Dell CEO Michael Dell and NVIDIA's Jensen Huang there on the AI frenzy as we await those NVIDIA numbers. Meanwhile, Taiwanese PC maker Asus says it's confident that its AI-focused laptop can compete in the global stampede to deliver products that are focused on the new tech. Co-CEO Samson Hu spoke exclusively with us in Taipei about the company's strategy and ambitions.
Within 3 years, we want to achieve number one in the consumer market, but if you come in the commercial part, we would like to be ranking on number 3.
You have this new Snapdragon Elite X or X Elite processor, right?
Yeah, that's correct.
Why the switch to Qualcomm? Are they able to offer the speeds that are necessary to incorporate, like Microsoft Copilot and the AI capabilities, and at the speed and battery life that is necessary, as opposed to what you were previously getting with Intel?
Because of the new era of AI, the application is totally new. So those kind of early about the legacy application compatibility about ARM is not so important.
Do you think this is going to rekindle the debate and give new life to the old debate of PC versus Mac?
This time, I do believe this is a good opportunity for those PC brands, including Asus, to compete with Apple. Yeah, because of the introduction of the Qualcomm ARM-based CPU and NPU.
There's been a lot of hype over AI, as you know. But at what point is there the risk of overhype?
So this is an opportunity and a challenge for the industry. So right now, I do believe through the joint efforts of the PC industry stakeholders, our joint efforts, we are developing necessary technology and overcome those challenges might be brought brought by the AI technology, we will overcome and bring this kind of new opportunity.
Copilot in particular from Microsoft, Copilot AI, will be on the consumer laptops. I believe that these require access to user information for Copilot. How are you navigating that tricky requirement?
According to the experience or the collaboration between ASUS and Microsoft, I am confident that kind of privacy issue will be carefully tackled.
Right.
Yes.
But how many of these features, these types of features, would be available on PCs that potentially go into places where data privacy is much more enforced, like China?
The Copilot, there are a lot of different Copilot AI assistant applications going to be provided by Microsoft. So this time, Microsoft Copilot functions will be only partially available in China market.
What kind of demand are you expecting for this new AI laptop?
Our estimation is about single digit penetration of AI PC.
But single digits is anywhere from 1 to 9%.
Maybe high single digit.
High single digits.
Yeah, if I say it more specifically.
Much is made about cross-strait ties and also the economy. How do you see the significance of Lai's inauguration and of the need for a status quo across the Taiwan Strait? Not to get too political, but as far as creating and maintaining a steady and stable business environment.
President Lai, he really understands that ICT technology in Taiwan plays the most important role, contributing to the nation's GDP. And actually, President Lai used to have very frequent contact or even meeting with the industry leaders. And for myself, I also have several times a chance to have meeting with him. So he understands very well the needs and the pain points of Taiwan industry. Yeah. So very interesting. If you look at the new appointment of the leadership of our new government, you will see a lot of department heads from ICT industry. Yeah. So I'm very confident that President Lai will urge the new government to develop those new policy helpful for the ICT industry to further drive forward the strengths of Taiwan tech industry.
That was the ASUS co-CEO Samson Hu speaking exclusively with our Chief North Asia correspondent Stephen Engel. And big tech, really the theme coming across markets this morning, and really that anticipation around NVIDIA's earnings that are due on Wednesday. We'll have the reaction in Asia on Thursday. But that's the state of play there, where we actually are seeing a lot of the movement, because that's very flat right now. Where we are seeing a lot of the movement is in the crypto space in particular, and tracking Ether very closely, or Ethereum, given we're starting to get these rumblings that are coming through that the US SEC could actually be looking to approve possibly spot Ether ETF applications that previously wasn't thought to be possible. More ahead.